That's what I want. All right. Well, welcome back to our Phenom Group podcast. And for our audience who knows, I don't do a lot of podcasts in general, but I certainly don't do kind of a greet and meets and an interview style podcast. So it's with great pleasure that I have the opportunity to have kind of a fireside chat, something kind of out of the industry, but it'll also delve into how we got into the financial markets industry. So it's great pleasure to introduce Frank Cappelleri, who will be my victim here, so to speak. For those of you who know, I don't, generate a rehearsed podcast. Bear with us, but this should be fun. So, Frank, welcome. Thank you for taking me up on this opportunity as well.
Seth, thank you very much. And the more unscripted, the better, right?
Yeah, yeah, I always think so. You never know what you're going to hear. I mean, might be some
Exactly right.
tidbits in here we might need to edit out. I guess I'll kick it off with our first question, to get the ball rolling. Maybe if you could briefly introduce yourself and kind of focus on your background, how you got into the financial market industry, as any role that you've been able to participate with over the years. And some of us just fall into the industry. So if that's the case, yeah, that's all right as well.
Right. Well, it's interesting. I've always thought about going to Wall Street, and it kind of has taken a few different turns. My aunt was a portfolio manager on the buy side for a long time, and so I'm friendly with, obviously very close to her, and I get to sometimes when got older, got invited to Knicks games of really cool tickets, right? Very
Oh yeah.
close. So that was cool. And then I went college, graduated in 1997, but during the time of that, had the opportunity to be an intern at the firm Bear Stearns. Some people may not
Oh
remember that
boy. Oh
name,
boy.
right? But what was cool about that is I was sitting on the sales desk there and working a lot with research analysts. And a number of times they'd have these researcher lunches, and they'd invite the institutional salespeople up. They invited some interns up as well. And what struck me was that it was basically everyone sitting in a round table and could ask the analyst anything, and no matter who it was, they knew the answer like that. And it really made an impression on me that how can someone know this much about not just one
Right.
company, but all of them that they cover? And it really gave me an interest in maybe pursuing that. So you fast forward to 97 and graduated from college and ended up majoring in English. Didn't anticipate that. So I was like, can
Well,
I
we have
still
that
really
in
go to Wall
common.
Street?
We
Did it
have that
really?
in common. Yeah, my first
Well,
degree was in English.
there we go. Right?
I
And we meet on X
know,
when,
right?
when grammar is maybe a luxury.
Yeah. Good
Yeah.
stuff. That's interesting.
Yeah, right. But as you may remember, 1997, very good job market. So I applied to a few different positions. I got two job offers at the Smith Barney, again, another name that's not there anymore, Citigroup now. Um, so two different research assistant positions offered in
Not
two
bad.
different areas, one being technical analysis. Didn't know anything about it, right? What I
Yeah.
found interesting was that they had this big real estate of space up there on the floor, massive chart room, right? Fidelity chart room is famous. I
Yeah.
would say the Smith Barney one is bigger though. They had a ton of real estate there. And so I was like, I still want to be a fundamental analyst, but I don't really know what sector I want to go into. So might as well understood that I didn't know much. And I'm like, at least let's try to learn about the market overall. And so the cool thing is, some people may know this about my history, is that I ended up working with two technical analysis pioneers, Alan Shaw, may rest in
Um,
peace, and Lee Zamata, who still is out there.
Luis
And
Amata.
so,
Yep. Yep.
yeah, right. I mean, what a wonderful lady,
Legends.
outstanding analyst.
Yep.
Yeah. And so again, 1997, we're in the middle of the internet boom, not bust yet. So again, I was at Bear Stearns for 2 summers, 95, 96, now 97. So everything's great. Market goes up, no problem, buying
Easy
overbought.
jobs opportunities,
Yeah,
easy money
right.
opportunities. Utopia.
Exactly. But the interesting thing, Seth, I'm thinking about it now, right? They must have been, in their 50s and 60s, like I'm 51 at the time. And so you think about, if you're in the industry for that long, you see all sorts of different markets crashes, bear markets.
Right.
And so when that internet bubble was happening, as you remember, like everyone felt it, right? And especially people outside the industry. How many stories have we heard about people
Yeah.
quitting their jobs to be a day trader, telling people like me who was in the industry, anyone can do your job. It's easy. Market goes up, right? So the people that didn't really buy into it, again, were veterans that understood that this doesn't last. So
Right.
getting to the point is that we ran a model within that group which focused on relative strength within the industry groups. And so it just allowed,
Right.
again, Louise and Alan to ride this with basically having blinders on because, if you look at the relative strength line, it was like a once a week thing in a piece of paper, right? If it ticked up, we're still in it. That's it
Right.
next week, right? Just like nothing else. I'm paraphrasing a little bit, but that really struck with me because then right after that, I went to Instinet where I was for 22 years, then on the trading desk, and the bear market happened, right?
Mhm.
So 6 years up, down, and then just a quick thing with Instinet, I was, there a long time. Much of my time there was as an institutional equity sales trader. So I got front seat to some of the biggest hedge fund managers that you know about, strategies they wanted to use, how they worked, how they did well in the worst markets, including the great financial crisis. And so toward the
Right.
end of that, started doing much more content from a technical analysis perspective. Ended up becoming the desk strategist there, did some media, and then it just really got me thinking about what it would be like to have this offering on my own. So I talked to some of my institutional clients, got a good bridge to here. And now 3.5 years later, it went like that. Capthesis
Nice.
is born and, do much of the same analysis. It's obviously improves over time, but many more, interested people that are retail oriented financial advisors. And it's been a great run so far.
That's awesome. Can I ask you about uh when during that time period, getting your feet wet in the late 90s into the early 2000s, like certifications and all of that stuff? What was, because you're doing a 9 to 5 basic, well, I mean, markets are not 9 to 5, but what was that? Because that's a lot of workload just to get, CMT type, certifications or licenses. How did you, I mean, you're a family man, I assume that was just passion. You knew what you wanted to do and you just took it on. And what were
Yeah,
those days like, getting all of those credentials as well?
painful.
Yeah, yeah, yeah. I
Yeah.
I admittedly have avoided doing most of that because you know, I I've carried this. I'm not a fan of the industry, the way that the industry is run, but I have an admiration for those who go through the process of, self-education, like so the CMT process. What was the hardest, I guess that would be the better question. What was the hardest license and or certification to achieve?
Well, I have both the CMT and CFA designations, and CFA was a bear. And I recommend
I
people
hear
do
that a
that
lot.
early.
Yeah.
Yeah, it's a measure of perseverance, really.
Right.
And because you know what it is, like you're young, and I again recommend people doing it the younger the better, and life gets in the way. So I started doing, which I don't recommend, taking both of those exams at the same time. Year
Okay.
one worked out great. Mm. Year two and three was like, then I changed jobs, then I got engaged, then I got married, then we moved, like all within that time frame.
Right.
And I realized I was going through that. It's like you just got to take a breath and space it out a bit. So I did. But again, it's like it's tough because you put so much time in and you just don't know at the end of the day. So after six of those exams total, that's when we started a family. After that, it was have to get that done.
Celebration. Well, I can imagine what that celebration was like.
Yeah, right.
Hence
But
the
you know what?
family, right?
Right. But the funny thing is like it's great that you have that, right? It just, if
It
nothing
opens a
else,
lot of
put it on your
doors.
card. It just gives, it gives you credibility.
Right.
But there's plenty of people, Seth, like yourself and others, that can be extremely successful in the industry without any of those. But it was just, coming from this institutional, Wall Street sell side firm,
Right.
everyone who was between 23 to 28 did it, right?
Right.
CFA exam or the CMT or both. So I can't say I'm too different from that, but I just, again, persevered through it. Glad
Yeah.
I did. Glad it's over.
Well, congratulations. I hear from a lot of, folks in the industry that, as you well characterized it, it's a bear. To achieve just the CMT, but to also go for your CFA, it's a bear. I was tempted to go in 2012. I had sponsorship and everything to do the work, but life got in the way.
Yep.
And I was, kind of to get into how I got into the industry, similar to yourself, a family member had a passion for it, or just happened had a need. So my grandmother, same time period, 97. Her My grandfather passed away, and she was, I don't know, 80s, upper 80s at the time. And I would go to her fourth story condo in Boca Raton, Florida, and to take her grocery shopping every Saturday, take her to her favorite pizza joint, and then take her back home, make sure, that things are okay for, a woman of her age.
Right.
Nothing's going to get lit on fire. I would have to remove stuff and she'd get angry with me. Um, so that was my routine. I'd go through her mail, as part of it. And back then, I don't know if you remember, and I don't know if it was regional, A.G. Edwards, which was
Sure.
eventually bought by Wachovia, or First Union and then Wachovia, and now Wells Fargo. Like, that's been a chain of custody there for that banking institution. So I'm looking at her A.G. Edwards statement again about the .com period, um, and she's in all of she's 80 plus years old, and she's in these tech mutual funds.
Wow.
And this was now probably 99 2000, where every statement that I see, it's going down a good 20 grand, like
Mhm.
each statement. And so I question her. I'm like, grandmother, have you spoken to anybody at A.G. Edwards? And she, oh, they don't talk to me. And I'm like, maybe we should schedule an appointment. So we did. We scheduled an appointment, met with the brokerage officer there locally, and what he basically was expressing, I had um, limited ability to accept. I pushed back. I'm like, but she's 80. Well, she owns Florida Power and Light, and that has a good dividend. I'm like, that's not helping with the 20 grand she's losing a quarter here. So it didn't resonate well with me.
Mhm.
So I asked him by the end of the meeting, I was pretty blunt about it. Can you please liquidate her assets and send her, the remaining? And sure enough, that's what he did. And so from there, she, had what she had left for retirement and everything. But it got me, watching. It was hard growing up at that time in college. I think we're around the same age, actually, Frank, because I graduated 98 or 99 with my degree, my first degree in English education.
There we
Um,
go.
so I was interested in the markets, and hard not to miss CNBC back then, because I was doing my student teaching, and the teachers hang out in the teachers lounge, and they invite, even as a TA, learning how to be a teacher and finishing up my degree. I had my one group of teachers, and they'd all be talking about their mutual funds just going up and up.
Yeah.
Hey, this just, do you all want to go out to dinner? And I'm like, wow, mutual funds, I got to look into that. So I eventually opened up my own Scott Trade account. Remember the good old
Scottrade,
days?
sure. Oh
Scott
yeah.
Trade, yeah.
Great
Opened up a Scott.
commercials.
Yeah. So, and I had all my ticker symbols there, and the Nextels, the push to talk Nextel,
Yeah.
Starbuck, Nokia back then was huge, PeopleSoft, Oracle. So I had all, and Starbucks. And so I just started out, I had some money and I funded the account and I was just trying to make $100 here and there. And I was just playing Starbucks. I had my spreadsheet, right? The
Hmm.
opening price, the volume for the day, the closing price. I track it, when I was home. And I did pretty well, but I was just investing in what I knew, which was Starbucks and at the time Nextel. I'm like, Starbucks isn't going out of business. They're everywhere. So I know it. I'm not going to play with pets.com and stuff like that.
Yeah.
So I was just trading what I knew and very small, just to make $100 here and there. And that's how I got my feet wet. Life happens as you spoke about. I became the patriarch of the family, lost my father in 2000, July 2000, and now I've got to raise two kids. He set us up nicely, thankfully. Um, you're a New Yorker, I'm a New Yorker. You may have been
Mhm.
familiar with Checker Cab Industries.
Oh, yeah, sure.
My dad brought that down here, called it Yellow Cab.
Oh,
Um,
outstanding.
so yeah, I mean, he set us up decently, but I still got to raise, my brother and my sister. So I went to his work, and that didn't go well. The industry back then was not Uber. There weren't credit cards, so when you're dealing with cash, dealing with some rough folks.
Oh, yes.
Fortunately, his vice president for 20 years, he's like, yeah, Seth, your father never wanted this for you. Let me make you a good offer. We'll bring in auditors so you know it's good. And he did. He did well by my father, I would say, to help
Great to
out,
hear that.
help us
Yeah.
out. And so, just started investing. I bought real estate. I went back to work. I was working for Target for a number of years, but always, thankfully, mobile devices and smartphones, you could, work and trade.
That's right.
So
Even back
always,
then.
yeah,
Right.
yeah. So always had the phone, was always, again, just investing and trading what I knew, but always realizing I'm leaving money on the board. And how come, right? I'm leaving too much money on the table. How can I make this bigger? And so I started, you hear about EPS and quarterly earnings and revenues. And so that's when I started reading 10K filings and listening to conference calls. And the more you get into it, the more, from an English background, the comprehension skills are there and it
Hmm.
starts making sense. And you start to think longer term instead of day trading, swing trading, instead of swing trading, longer term horizons. And that's how I was able to capture more of the upside over time through fundamental analysis. So that was basically my journey, helping grandma out and, developing the passion slowly but surely over time. So,
So
yep.
what about, I had a question for you then,
Yeah.
Seth, because I know that you may not mention it, but there are some articles about you out there,
Yes. Yeah.
right? About doing very well on VIX trading. So I don't know if you want to
Yes.
go into that now, but I'm curious to hear your take on it, on what
It's
happened.
I think it's a decent story.
Nice. Yeah, it sounds like it.
So I was doing well on my own, in my career with Target and, um, just, doing I traded and owned Target. I traded and owned Amazon, the things I know, the things that have scalable business models and whatnot. And we started our first firm when I left, working in retail for a number of years, kind of got burnt out and left. And a very good friend of mine at the time came to me and said, what if we start our own research firm? I know you know your stuff, Seth. So I was like, okay, let's do that. And so we started our first boutique sell side analytics research firm. I did, most of the research and writing the reports and everything. And it was a very slow and painful start. It's putting money in and seeing nothing come back as a proprietorship, if you will, a small
Sure.
business. But it started to gain some traction. We started to get some hedge fund clients, and it was doing well. And then one day, one of our clients was like, Seth, you're a real smart guy. I just got this from my bank. It's a S1 filing for ProShares, ticker symbol UVXY, a volatility exchange traded fund. So I start reading. I don't know anything about, I mean, when you were first doing technical analysis, you were probably like, I see lines on charts,
You're right.
Yeah, it takes time. You got to dedicate and research what you are trying to gain an aptitude for. So I read the S1 filing. I don't know volatility. I'm trading corporate stocks. I don't know even what volatility means to the market at this time. And I couldn't make heads or tail out of this S1 filing. But I knew people in the industry that was their specialty. I reached out to them and they kind of gave me a crash course on volatility, how it works in the market, how it works in individual stocks, options, implied volatility versus realized all that nuance. So I felt better reading through the S1 again. And I'm like, okay, so this is basically a hedge against volatility in the market. Okay, so I need to go long this if the market goes down. Okay, good. So I take out a long position. I tell my client, hey, I think I got it. This is kind of a hedging instrument. I take out the long position in UVXY, and I'm sure you know where this is going. Down. So it's going down, and I'm like, okay, it's I'll buy a little more. A dollar cost average, as we call it,
Hmm.
right? A dollar
Right.
cost, and it's this. Even when the S&P 500 is going down, this still keeps going down. Like, what am I doing wrong here? I get back on the phone. I'm like, yeah, I send the S1 to, these well intended folks who know volatility, and they're like, well, Seth, there's a contango factor in here that you're probably not familiar with. And so that's when they gave me another crash course on the VIX term structure and VIX future products. And that's actually the assets under management for the UVXY exchange traded fund. And so it's taking time, but it's putting all these puzzle pieces together to surmise that, okay, so wait, I got to go short this because the contango impact basically is like an anvil on the back of this thing,
Mm.
regardless of what the S&P 500 is doing. That was my rudimentary understanding that galvanized back then and worked. Shorting this product worked from 2012 up to 2015. Then I suffered the biggest spike in the industry in the instrument or the complex in 2015, which forced me to learn that much more about volatility, about all manner of normalizing price action and developing thesis along with these new understandings and how to basically manage through these quote unquote crisis periods where a story within a story. I'm
Hmm.
down 66%, Frank, in 2015. The primary strategy that we were running in the Golden Capital portfolio at that time, because we felt confident and we thought we knew what we knew, was working to deliver above average returns for the
Hmm.
Golden Capital portfolio. And nothing had come along to detract from that understanding until 2015. And so, I mean, we've dealt with some volatility from 2012 to 2015, but not this kind. So there's a lot of energy stored up in volatility until that point that got released onto the market and in the Golden Capital portfolio. So I'm down 66% and trying to figure out how am I going to dig my way out of this. I've got clients to, speak on this matter with. And
Sure.
in the background, this one particular day, I hear my wife, honey, we've got it. We need a new fridge. I'm like, okay, down 66%, which is about $30 million at the time. And you want me to worry about a refrigerator, a new refrigerator? Like I can't deal with that. I'm trying to figure out what's going on in the market and how to dig myself out of this hole. I'm leaning into my partner. I'm like, can you tell me if this China hard landing thing is real, or like, can you please do some? Because that was the story in
Mm,
2015, that summer fall time period. China hard landing. Best Buy is closing all their China store locations. Ghost cities, right? CNBC did a whole thing about the ghost cities in China and the crack yuan 7, right? The currency rate. And so I'm taxing my partner to do some fundamental research on, whether or not this is going to be the end all and be all of, our contagion impact on our economy, and this volatility issue. I've got no way out of it. He surmised that no, it's just noise, but it is scaring people, and when you scare enough people, it's going to have an impact on the market. So what should we do? Oh, we need a dollar cost average more. We need to figure out our liquidity. It gives us X amount of time. And we did. We suffered through it. We suffered through it. Not the smartest decision, but I learned from it. Kind of the decision to, continue to layer into additional short volatility positions. And by March of the following year, we were clean through it, and the market was up and away in 2016, even through Brexit, right?
yep.
Brexit.
Hmm.
So that was essentially, I went from being down in 2015, 66%, but because we didn't give up any positions, any exposure to the market, that 2 year window balanced out to 126% return
Wow.
for the two
Yeah.
calendar years. And because I had so much leverage that I didn't, not the smart, it was a dumb, good mistake
Yeah.
because it netted out well. And I learned how to better position size and how to be maybe a better macro economist as well.
Yeah. So I don't want to keep asking you questions, but I'm curious. That's why
Oh,
we're here.
please. I
So
got more
then
for you, buddy. Don't
I
worry.
can imagine. So then knowing all that, and then we come to 2016, 2017,
Yeah. Yeah.
2018. So the vol implosions.
Right.
How did your strategy deal with that? Because as you know, some of those ETFs, ETNs just evaporated overnight,
Yeah.
right?
Yeah.
Whatever it was, January 29th to 30th.
So the mistakes that I made in 2015 and righted through 2016 into 2017, and why I tend to carry a mantra that a good volatility trader is a good macroeconomist. It forced me to focus on the things that generally produce volatility events, which are generally macro in nature, like the current one we're
Mhm.
tiptoeing through right now in the markets. Um, so that helped me better understand the instruments, all the derivatives within the volatility complex that I didn't have a firm foundation with at the time. I understood VIX futures are this, the S&P 500 options are this, the VIX exchange traded products that I trade and or own long term are this, but the chain of custody, as I call it, I didn't know how that worked. Like, what's the primer, and what are the actual derivatives? First degree, second degree, third degree derivatives. So I kind of got to know all the instruments better and where they fit in this chain, if you will. And through that, so 2017, as you recall, the biggest pullback was 2.5%.
Yeah.
And the VIX itself had the lowest reading in history. 3 months before the VIX hit its new all time low, that was my call that the VIX would make a new all time low this calendar year. A little lucky, I mean, who cares even? So you call the VIX is going to make a new, like, nobody showed up at my door with a trophy or a medal. So it's just kind of okay, I'm doing something right, maybe.
Yeah.
um, So 2017 was just a fantastic year for the short volatility strategy, and it garnered a tremendous amount of attention because of the, we you look at the Vega aspect of volatility gives you a notional value of open interest, and it had ballooned to a level that had never been seen before, probably because of volatility being ever tampered lower and lower that calendar year.
Mhm.
And I'm minding my own business. I wake up every morning. I believe in routines as an investor, kind of like a pilot has his checklist. He has to go through all the gauges and everything before liftoff. I have my own routine, and part of that is making sure I address the emails that I need to address first thing in the morning. Get that out of the way, all the communications, I can move on. And I got this one, it had fancy, like spam mail always has in the subject line, little carrots. So I just pushed it into the trash. And then a week later, same one, New York Times,
Okay.
fancy things. And all right, so I'll open it this time. I open it, it was an actual reporter who wanted to interview me about the short volatility trade. So I took the interview that I thought was just going to be a blurb, like maybe he just wants to me to have say something because he's read an article. And sure enough, he did read an article that I had written. He's like, so we go through about, a meet and greet for about a half hour, and I explain to him what I do. And he's like, all right, do you mind if we touch base over the next week or so? And I'm like, yeah, sure. It wound up being a month-long interview process, where he'd record this, that, and the other. Some of it not to my understanding at the time until we had our final interview where he said, you're going to be the feature. Ex target manager turned volatility trader.
Oh yeah, that's a great headline.
Yeah, that's what he told me. Even those were his words. It's like there's no better story than a one like that, the common man. So I was like, okay. At the time, I had 300 followers on Twitter. Right, it was Twitter back then.
Okay.
And so then it published the article in the New York Times published, and I just see bing, 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 alert, alert on my phone, and I see my follower count go up and up and up. So it was interesting, right? It was my little claim to fame for my life. I'll be happy with just that, right? But I'm still working, right? I'm doing my job and I'm managing, rather sizable portfolio. And I'm recognizing the buildup in the interest even there after the article got published, because it kind of put a spotlight on short volatility. And you got
Got it. Right.
more and more people that want to be the quote unquote ex target manager, right?
Hmm.
They want to all do
Yep.
this too. And I'm seeing the notional value on some of these instruments, and the way that they're structured or created is unsustainable if you have certain thresholds achieved in the VIX, right? If it rises so much, there's a threshold at which these particular instruments will run into trouble. The net asset value will balloon to an unmanageable level, and there'll be losses. So I write an article in November, November of 2017. I mean, we're still in the heat of the bull market
Sure.
and bear
Just
market.
heating up too, right? Just
Yeah,
starting to heat
yeah.
up even more.
17.5% gain with a 2.5% max drawdown that year. So I write an article because I mean I'm getting bombarded with offers left, right, front, and center. You've been on CNBC a lot over the last couple years. So I'm getting offers. People want to interview me. Institutions want me to come work for them. Goldman Sachs wants me to come to London and work with the team in London. So I'm fielding all this, and I've got a daughter, a 1-year-old daughter. I'm trying to do the family thing, and it was tough. It was really tough. But I'm also concerned about my strategy impact on the broader public.
Mhm.
So I write a blog on talkmarkets.com, and it was titled Short Volatility Strategy and a Word of Caution. Because this is not for everybody. It really isn't. Most of the time when somebody comes to me and says, Seth, I want to trade volatility like you, I say, why? Why would you do that to yourself? Like
To
I
the CFA exam instead. Yeah.
yeah, there you go. Talk to Frank. He'll set you up with a CFA exam that'll be
Yeah.
just as painful. So I write the article because I'm genuinely concerned. I see what's going on, and I highlight two of the instruments in my work that I've done so far as qualifying the different investment vehicles in the trade. I highlighted SVXY and XIV. And wouldn't you know it, fast forward to February of 2018, we had Volmageddon, where VIX futures shot up and reached the threshold that I had warned folks or tried to warn folks about. And the two instruments that I warned people about in the article in the blog were the exact two instruments that blew up, and only those two instruments. So
Evaporated.
in yeah, so in how did I manage through? I lowered my exposure towards the end and I switched instruments. UVXY was my primary, and back then it was 2 times leverage.
Hmm.
I saw kind of what was happening in the trade and I decided to back off a bit, I'm an investor, right? I'll ride through the storm. I knew no matter which instrument I chose, I'd still be taking a beating at some point in 2018. But I'll be taking a less beating by leveraging lower to the Barclays product VXX, which is only 1 times leverage. So that's how I managed through that, also avoiding the worst of the two products, SVXY and XIV.
Oh, right.
So,
Well, that's what I
yeah.
really wanted to hear today. I mean, I'm happy to talk to you, but you're Mr. Vix. I always see, one of the many things that I learned from you on X's. I know I'm generalizing, but sell the VIX, sell the VIX, sell it. Anytime it pops, sell it. But I know there's much more into it. So
Yeah.
hopefully
Yeah.
people that view your YouTube channel who didn't know that story now fully know it and
Yeah, I don't
realize,
think I've shared it much
yeah, no, that was
over the
great to hear.
years.
I think you should share that more often.
Thank you, thank you. And why I say it's not for everybody is the story within the story with my
That's
wife.
right.
Not everybody can or even should suffer, those kinds of drawdowns. But for me, even nowadays, 40% is like just walking uphill to me. It's not. I'd rather walk downhill, but it's
Right.
still a walk uphill in the park. I can do that. Most people can't. The emotional quotient aspect is really difficult to manage through those kind of drawdowns for
Yeah, and it takes all that experience to
yeah, yeah,
understand that part of
yeah.
it, right? You
That's
can't
why I
just
say
walk
I'm
in it.
lucky. I think I'm lucky in respect to I did go through it. I could have easily just taken the losses, but a little bit of luck and naivete to suffer
That's
it,
right.
come through. Yeah, naivete is the better word.
Well, everyone starts off that way,
All
but
right,
being
I
able
want to
to
get into
withstand
you a
that.
little bit more.
Sure.
And again, keeping this kind of lighthearted, I gave you a little bit of a funny story. So, what's the funniest moment as a professional, followed by maybe your most vulnerable moment in the industry? The funniest and maybe the most vulnerable, which
Sure.
would give it
Well,
some
okay.
sentiment.
I was on a training desk for 22 years. There is a funny moment almost every day, as you can imagine, right? The market, the people sitting right
Yeah.
next to each other in a huge room. But if I think about it, one particular instance, I'll walk you through it. So, as you can imagine, the training day starts. Everyone gets in early. They have the research meeting 7 a.m. You go through all the necessary steps. You call your clients, talk about the call today, and then it's breakfast time, right? So that's an important part as well. So we're still in. There's senior managing directors. There's the regular traders and their assistants. Everyone has a job there, and again, not just working, but making sure everyone is taken care of at the same time. Now, on occasion, we'll have a late meeting as well, and it maybe goes a little bit closer to the bell. And remember, back in this time in late 90s, early 2000s, a big part of the morning was not just getting research out the door and understanding what the trading strategies were, but you had to call down to New York Stock Exchange, right, to get a
Mm.
look. What's the opening look? People
Yeah.
don't understand that now. It's like no one really knew how something was going to open. Didn't have all these indications as much. It was more, the traders down there, when there was many more people than just in the museum, had
Right.
a lot of information. And so a lot of the times too is, and you call, you get a communication back and it was incoherent. Rather than send a scan of a signature, what does this mean, right? So comprehending
Is this
all
a
that.
prescription for,
Yeah, that's exactly what it looked like. So again, so we have a lot of things going on all at once, everyone talking, getting ready for the opening bell. So it's 9 o'clock, meeting ends 9:15. So I was sitting next to, people 3 feet away on each side, and great people I work with every day. And so one of my female coworkers, outstanding person and great worker, just had to go to the bathroom really late. So about like 9:25 or so.
Oh,
Like,
geez,
oh yeah,
5 minutes to the
I will be
bell.
right
Yeah.
back. Right. And so the way our desk was set up is that, I was on one pod section here, and then two desks away was an aisle, right? And so then another section was there. And don't forget too, it's like you had monitors stacked.
Yeah.
So
Yeah.
you really couldn't see anything
Right.
in front of you to the side. And you didn't
All
really care. I mean,
sophisticated.
that's the way it was because you need all those screens to make
Right.
sure. And so that's the setup. So she's so she gets up and says, I'll be right back. And she's pretty athletic. So she'll start, she's charging out to make sure she goes and comes back. Again, 9:25, we had a late meeting. People are still getting their coffees and the breakfast. So as she's coming around the corner,
Oh
someone else is
no.
walking up with four steaming hot Starbucks
Oh.
coffees. And we see her come down and we see
Oh, gee.
complete collision, complete collision.
Oh
He is
God.
so annoyed. She's apologetic, but then runs off, right? And then the manager who was looking at the coffees was just like,
Yeah.
you
Yeah.
know, but our side was just laughing all
Oh
morning. And to this
gosh.
day, I bring it up to people who were there
It's
now
like a
over 20
movie in
years
the scene
later.
in a movie. Yeah. Yeah.
Oh my goodness. But that kind of thing goes on so much,
Right.
and
Right.
especially on a sell side trading desk, right? Because you're not, we're executing orders. It's a very important job, but we don't have, that particular desk execution, right? It was
Right.
something that you had to keep track of, but you're managing your client's orders most of the time. So there were some points there, sitting next to salespeople as well. There was always some kind of game going on, but that one really sticks sticks out in my mind
It's a good one. It's a
for
good
sure.
one. So what about like a vulnerable moment, or I don't know if there's a better word, something where it was a career moment, maybe like something that gave you a big picture perspective about what you're doing versus juxtaposed with what you want to do, how you're going to move forward, kind of a key moment, a pivotal moment in your career, maybe.
Yeah. Well, actually, one really sticks out, and this was right during the thick of the Great Financial Crisis. Right. Again, so sitting in a brokerage firm, number one, like everyone else, seeing your personal accounts go down every day, just getting obliterated. Seeing your clients have their trades blow up, realizing that half of them may not be there when it's all
Right.
said and done. And the third part, again, brokerage firms falling,
Right.
collapsing day by day. So concern for your own personal finances, concern for your clients and your own job. That's the only time other than 9/11 I was scared of going into work every day.
Yeah.
And so again, from that point, that was in obviously 2009. I started at Instinet, which is the equity arm
Mhm.
of Nomura, the big Japanese bank.
Right.
And I was an analyst initially, but then started covering accounts in 2003. So I was just about growing them, obviously getting as much volume through the door, giving them products, and just going through that motion. And I wasn't really doing as much technical work as I did before, just learning about things. Because again, I wanted, sprinkle it in more and more I could, but it was mostly just, making sure the accounts were serviced. And so when that was happening, it's just you just felt helpless, right?
Right.
Things were breaking every day. The trading systems couldn't handle the volume and the
Right.
volatility, and you didn't know what was opening where. And so I remember getting on the phone with one of my seasoned clients who was then running just a small shop. And he said, I'll tell you one thing. He's like, you got to do one thing and one thing only to get through this. I was like, what is it? I'll do anything. And he just said, keep your seat. I was like,
What does that
what does that mean? He's
mean?
like,
Yeah.
yeah, keep your seat. And he's like, just do what you can to make sure you're still there through this. Because I'm telling you, this is going to end, and whoever comes out the other end of it is
Mhm.
going to be doing even better.
Right.
So, I stewed on that for a while, and I realized, well, how come, what can I do to ensure that? There's really nothing you can guarantee.
Yeah.
But I was like, well, I'm doing technicals. I have this background that, I kind of moved away from a little bit. Again, the English background as well. So I started writing a daily note, nothing big, to my own pad clients. So about 25 or 30 of them. You start getting into a rhythm. Pretty well received. It was helped complement some of the trades I was working on, some bigger picture. And then, some of my colleagues caught note of it and they're like, would you mind, Andy, my, clients as well? Because everyone benefits. And at the time, I still was there. The gentleman who hired me was still there, so I wasn't stepping on his toes. But
Right.
eventually, he left the firm, and then because I was writing that every day, it was just very easy to then take that and now put the entire firm and all the firm's clients on that list, and that's really
Nice.
propelled the analysis and the understanding. Got a lot of financial media type opportunities, and so it eventually pushed me all the way to the end of my time there to voluntarily move off of the desk, which is not a very popular decision when you're on a sales
Yeah,
training
I can
desk because
imagine.
you get paid by the book you're attached to.
Mhm.
And so, again, but I just felt calling to it. The other part with Seth is that I knew how much, you know, big hedge funds needed to be serviced. It had to be someone who had a direct focus on that business. And I felt like I couldn't give that as much because I was getting pulled away by doing different projects for not just buy side traders anymore, but now buy side analysts, portfolio managers. And I felt that it better serve clients and the firm if I did that as a sole focus. And so that helped me kind of look at things from a different angle, right? Just being part of a big organization as opposed to now potentially running a business. So
Right.
I kind of constructed it in the last 2 years there to see if that could work. And I got a model, in place, had some indications of interest from clients about what that will look like going forward. And I will say that having COVID happen really made that a reality because everyone knew, of course, that you could operate at home if you needed to.
Right.
And especially if I wasn't even trading anymore, I could do it. And so, again, it may not have been that exact moment that got me to that point, but I think it's an extremely important point to understand for anyone, especially people that are younger in their careers.
Mhm.
There's going to be ups and downs. Sometimes things you cannot control.
Right.
You have to have tunnel vision and
Yes.
continue to do what you're doing and do have a specialty, right? Have a specialty that you can do and lean into, even in this AI world, right? You can't just lean on that. You can't just say
Right. Right.
it doesn't matter anymore. No, it does because
Yeah.
you can't replace yourself and
Right.
your personality, your authenticity is extremely important, especially during the hard times.
100%. Fantastic. What I found so interesting, we forget the people that were there that were so instrumental. When I think about, my career over the years and hearing that gentleman, tell you just keep your seat. It's those moments. It's those what just a few words helped you transition into a big, to look at things from a bigger scope and hone your skill set. And so I think that's a lot of folks. Yeah, I think there's a population of investors and traders that are out there that think the lone wolf way of doing things is the way it's done. And I think that breathing life into the fact that you need resources, you need a good, you need a good team around you. Whether that's your family, your direct family, friends, or just industry, people in the industry that you've known. I'm as a Christian, I my walk, involves a lot of different things. And one of them is developing relationships with other Christians so that, hey, I can, become better in that aspect. And from, translating that to, investing in trading, doing analysis, technical or fundamental or quantitative, we need people that demonstrate like you do with the cap thesis letter. You demonstrate and articulate every week expertise, as opposed to folks trying it on their own and constantly saying, well, this works for me. How do you know it works for you? To what degree does it work for you if you don't have some a team of resources around you that can give you feedback, that can analyze your work? So I think that's what stood out to me in telling your story, that there were people there along the way. You invited other people through your writing, through your note, which I'm sure was more than just a note. And that just expands your knowledge base. That really just and helps you to perfect it. Or there's never perfection. I think you would
Right.
agree. Every day, people think it's a colloquialism. Oh, every day I learn something. No, literally,
Mm.
I think
Yeah,
I
yeah.
learn something every day when it comes to the market because it's always changing, to one degree or another. So
Oh yeah,
fantastic.
you learn something whether you want to or not. That's for
Yeah,
sure.
yeah, yeah. I didn't know about a global pandemic shutdown until
Right.
so absolutely. I think well, I'm trying to think about my funniest moment. Um, so I think it was consulting with a hedge fund. Oh, okay. So 4 years ago, probably 4 or 5 years ago, I'll say, a hedge fund, not to be named,
Okay.
um, but one of my jobs was to, hedge funds will have anywhere from 7 to 15 analysts covering different categories, developing different thesis to introduce to, the hedge fund, the guy who presses the button, buy or sell. And so one of my jobs was to help train the CFAs how to be or improve their CFA manship, if you will.
That's pretty
One
good.
of one of the issues this hedge fund was having was just getting callbacks, just getting meetings, just getting attention from communications with a investor relation department that they want to invest in the company. They'd send out, their intentions and the reasons why they want to hold the meeting with the CFO or the CEO or the CMO, depending on the business model, and they wouldn't get, responses. So I'm looking at the email, this one particular example. I'm looking at the email, I'm reading through the email, and I get to the signature, and again, 4 or 5 years ago, so it was still Twitter. You can follow me on Twitter, sincerely. And I'm like, really? Now that was actually the best part of it. That was like the least layman the individual was in her email to the company. It was littered with things like, and you remember the time and dude, said dude 3 times in the email, this supposed Harvard MBA graduate with 3 mentions of dude, and you can follow me at Twitter, her, his or
This was a
her,
buy
I
side
should say his
analyst.
or her.
This is the buy side analyst at a hedge fund saying to follow me on Twitter. I'm surprised they even passed any compliance. Number one,
It
right?
did. It did. And
It
yeah, and
did.
so that's what I was trying to combat, right? So now I've got to craft a professional feedback session, with the analyst and, get them to understand, this is a different setting, this, look, I get, the informal, attachment here that you're trying to create, but clearly if we're not being received that way, we need to adjust to the company demands and perception of it, not them to us. And it was like pulling
Exactly.
teeth. I should say, it can be like pulling teeth. So that was probably the funniest thing that I had ever come across in my consulting duties. I think my most vulnerable was starting starting Phenom Group maybe a year into Phenom Group. We started the day after Christmas. We launched the day after Christmas, 2017. We launched well received in the beginning. I take my work, pretty seriously. I put a lot of time into it, and um, the efficacy for the research we produce, so far as, hey, if our investment thesis is this, and it actually achieves the investment thesis, so that's very strong. And our strategy, our proprietary strategy for investing and trading is pretty strong. And so, to see the adoption and attrition, as a small business owner, if you will, it can be discouraging, right? Because you want to just grow, 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 and you want to help more and more people, and you want word of mouth and all that. When a lot of people just aren't investors. Sometimes people find out that they're not cut out for investing or trading through your service.
Mm.
So trying to navigate the emotions and put things into their proper perspective. Hey, it may not be the research, it may not be the work you're doing, it may not be the service you're offering. It might just be the thing that informs people, I don't have this kind of time. I'm not as dedicated. Um, Separating that has been a internal challenge for me over the years. And so from a vulnerable perspective, I would say, that's an ongoing struggle. But it teaches me a lot. It teaches me a lot. So
No, that's a great one. Obviously, I've witnessed that as well. And I think there is a thing in business, I'm sure you know it. LTV is, long-term value,
yeah,
lifetime value of a client.
yep,
And they have that for a reason because no one's a lifetime value. I mean, no
yeah,
one's there for your lifetime.
right,
Some hang
right,
around longer than others, but I agree with you. Sometimes, it hurts the ego initially because
right,
if you're coming from, an industry, especially from Wall Street, you don't really see that as much. Of course, there's clients that leave, but they're not yours, right?
right,
They're the firms.
right.
And so you just get assigned a different one or whatever it is, or they go someplace else. But when you're running your own shop, like you just mentioned, it's hard not to take it personally initially. But then I think to myself sometimes subscribing to market data or some other type of membership and just time to move on sometimes. You don't even think about it. It's not
True.
personal. So just so I put myself in that position at times as well, but it's still something that you always have to work through.
Yeah, and I don't know why I don't, because I do similar, right? I'll have services, I'll have resources beyond my voice through Phenom Group because I think it's good to have third party research and other voices that you
Yeah.
can gauge, your work, your thought process, and things like. Um, but during those times where you see, folks going off and doing something else, unfortunately, you forget that, right? Because the emotions,
Yeah, exactly. You forget that
So,
exactly.
but good point. So let's see what we got for our next fun question here. Um, the things I've grown passionate about over my years in the profession, the things that I've grown passionate about over the years in my profession or industry, and I'm sorry, hold on. And why? Why am I passionate about them? Was there a moment or a personal anecdote that got you passionate about something in the industry?
Well, I think if you're in any industry long enough, you realize the most important thing is relationships,
Yeah,
right? And whether it's with a client or something else, but if you're in the game long enough, you're going to see people at different parts of their career as well. And so you always hear the term "don't burn any bridges," but it's true. And and again, it comes back to
I'm
like,
trying to work on that, Frank.
man, you're fine. You cut out the people that you
Yeah,
focus on the people that matter.
yeah,
right? That's what block and mute is for.
Yeah, true, true.
But sometimes, especially when you're early on in your career, it doesn't matter as much. You don't think about it. But again, being on Wall Street for so long and some of the clients I covered for over a decade or more, and those are the ones from a training perspective first that stuck with me through this, as opposed to ones
Right,
I kind of started talking to later on. I was starting to do more content. And it's not because they don't believe in the content, it just wasn't that foundation as much.
right,
And so the other part is that, if you treat people the right way, and I tell my son this a lot too, is like all you want is someone to say, Seth Golden, oh, great guy, smart
right,
guy, whatever it is, right? Demands respect. You don't want to do anything that has a negative connotation from that sense. And so I think with that, you're willing to help out someone who treats you with respect, and you have that in return. And taking that off of Wall Street now, I didn't know who I'd interact with starting Cap Thesis, but in terms of meeting wonderful clients along the way, people from all walks of life, I'm sure you can agree
yep,
with this, Seth. You've been doing it longer than I have for yourself. And then meeting people like yourself just online. You just kind of gravitate to ones that, share things objectively, treat people with respect. And those are the people that you want to align yourself with going forward. Because in the end, making money, enriching people's
right,
lives is not just one person event like you alluded to, right?
right,
It's a team oriented thing that I think, try to find people that are aligned with how you think, not what your interests, but how you think, how you approach life and business. So again, I think relationships and understanding how important those are for
yeah,
you in terms of your business career and life in general are significant.
100%, 100% agree. Asking myself the same, so I really enjoy, and this is probably why I did retail, for with Target Corporation for almost a decade. Every day's different in retail because the same customer doesn't come through the door every day, and even if they do, have a different mood. So it was always a changing environment in retail. And it's the same thing with the markets, and it's the same thing with the economy, right? It's always evolving, it's always shifting, in this direction or that direction. And so I truly enjoy um, the volatility of that, I guess, right? If it's not the same, it's not homeostasis, it's volatile. I don't like status quo, I guess. And that gives me energy. It's life. I feel like the market has its own ecosystem whereby I'm trying to extrapolate some knowledge from it every day. And so I'm always passionate about that. When folks, I've often been questioned, like, how in the world, on a down day like this, today's a perfect example. I did two trades on JP Morgan today as it dropped below a technical level that I've been watching. Like, how in the world did you get two scalps off that in less than an hour set? That's what I'm trying to do. I'm trying to, I'm so pulled in by the industry that I'm able to get as much as I can out of it to satisfy the passion that I have. And I'm sure you feel this way too, right? You go on vacation, you're still waking up, checking the futures in your phone while the wife's sleep over there, and try not to shine the screen on people either. So
Exactly right.
I guess I'm most passionate about just again every day is different. You never know exactly what price is going to do, what individual stocks are going to do this, what headline's going to break, and I guess I like having that volatility, but it's not chaotic for my mind, so I enjoy it.
Yeah, that's important to recognize because some people couldn't take it
Yeah.
like that. I'm utilize, you know, tight bullish patterns that have breakouts and eventually get there. Those work great in October, November, December, January,
Mhm.
and they did not work well at all in February, right? Just nice little breakout, destroyed in about 3 hours. But, that's
2026 midterm
volatility, and that's what you
year.
have to expect. You just have to manage your risk.
Yeah.
Well, that's a whole other discussion, of course.
Yes, midterm years are a whole other discussions. So, on that note, right, things break down. Things don't go as planned. What are the things that, you still, after, 25, 26, 27 years in the business, in the industry, in your craft, what are some of the things that maybe you still struggle with, or are working to hone, that skill set, working to hone that skill set, to basically improve every aspect of your track record, your analysis, and what you're trying to, get to, because your
Yeah.
clients have goals and you're trying to get them to achieve those goals. So after 20 plus years,
Yeah. Well, I think always trying to hone in on the process, that's a general term, but it's always changing too, right? Because you do what you did 5 years ago, 10 years ago, made sense then. And for what you were witnessing in the market or how you thought about things, that will change over time. So just because you came up with a set of rules that worked back then doesn't mean they work now. So it's always about,
so glad you said that. Yeah.
yeah, adjusting or analyzing what happens. So again, I kind of mentioned in jest about how breakouts weren't working, right? So if I'm going to look at this quarter about the different recommendations I had and wondered how could I have done that better, and one of the rules that I can pull out of not just to help with the specific situation like we're going through now, but for the next quarter, for the rest of the year, what do I want to do? Do I want to, have squeeze out as much profits as possible and extend, maybe let winners run more, or is it better, because if you do that, then you have to extend the volatility on the
Right.
downside as
Right.
well. So what is a better approach? So I mean, that's one way of looking at it, but I think it's understanding that things do change over time. And if I just look at my first offering I put out even just in 2022 when I began to now, the crux of the analysis is the same, right? You know
Mhm.
me, I'm S&P 500 patterns, but underneath the surface, how that's presented, from coming from our standpoint, you need to convey things in a
Right.
manner that people can understand. So that's again from the English point of view, it was always about the process of writing is one thing,
Mhm.
but what pulled me into that was that if you're doing a report on something and you have all these different facts, you can come up with a different conclusion as long as you have supporting facts.
Right.
And so one of the reasons why my firm's name is Cap thesis has to be proven with research, right? You have a hypothetical idea of what the market should do. Now prove it. Give me all this different reasons why. I have trading recommendations as you as well, but no one really cares or shouldn't care. Someone just says buy this because it's doing that. What are the reasons behind it? Because I
Right.
want to understand that people are wrong a lot. Fine, but tell me the reasons why. And this is another side note story, but there was a gentleman that I worked with on the sell side, and the brokerage firm was at the time he was the head hardware analyst, right, for the firm. So, obviously in the press a lot. He was the only one with a sell rating for Apple for like a long time, right? And so people were like, "What are you doing?" But guess who got the call to go and see CNBC all the time? This guy, because they want to know the reasons why.
Right.
And hedge funds
Right.
want to meet him. Like, what is everyone else missing
Yep.
that you're thinking about? And they didn't really care as much. Like you hear about all the time, people rip people apart on X. What's this guy know? But these are very smart people,
Yeah.
research analysts on Wall Street. And a lot of them are trained in like the industry themselves first, and
Right.
then it can apply the financials to it. So it's a long-winded way of saying is you have to have process, but you also have to have the research behind it. And again, if you're a newsletter writer or someone produces some kind of content, you have to make sure that it's well, conveyed and understood. And I
Right.
think that's what is missing, kind of like when we on X all the time. You say one thing, you're ready for everyone to come back. Like if I put anytime I put a chart of any kind of classical pattern on X, someone's going to write back, this is the invalid head and shoulders pattern, whatever it is, right? You know it's coming.
Yeah.
And so again, initially it's annoying, but now it's part of the game. And what you really
That's
care
it.
about is
Yeah.
you're conveying the information, and you hope that you can identify some clients along the way that understand that and appreciate the entire offering, not
Right.
just the call, the presentation. It's all that together. So to
That's
bring it all the
awesome.
way back. It's the process, and it's always changing.
I have an interesting story on that Sell Apple because I took a satellite internship. Goldman Sachs was doing national satellite internships. I want to say it was all 50 states, but I just know it was in Florida. And I got accepted, and that was actually 2000, and it was after I left Target. And I'm, looking around, just trying to do stuff outside of trading, keep busy, because at that time, if I didn't keep myself busy, I'd get into trouble. So I took this, and the head senior, they called him senior hardware research analyst, was covering Apple, still Nokia back then, the Alcatel, I
Oh,
think.
sure. Yep.
Yeah, Alcatel and Crackberry, as it was called back then. Remember,
Right.
right? Right back
Sure
then, it
was.
was Crackberry is the BlackBerry device. And so he was my boss basically, but all I really was doing was proofreading and English background. I could proofread and do all of his communications to clients and send out reports and whatnot. That was the crux of my job. And he was going to be leaving. And at that time, BlackBerry was, I mean, it was everything. It was everything. The stock was doing great and whatnot. And he's like, yeah, if you want to leg up, just cover BlackBerry, help me out with BlackBerry. And it gave me an opportunity to travel, go to, China, have a meeting in Waterloo with the CEO and CFO back. I mean, this is, yeah, 2010, late 2010 now. I mean, I'm older. I mean, I'm 31, 32 years old at the time. But still young in the industry and just thrilled about this opportunity. Do all my research and everything, and my conclusion is this is going to go bad. Essentially, it's a 60 plus page report. I mean, I took everything that I learned from the sell side research analyst and applied it. So I mean, it looked buttoned up, and I was so proud of this report. I'm going to hand this in. There's no way they can deny me, a future, position of sorts. And a couple weeks go by, nothing. And I had basically just resigned to, I'm going to do what I'm going to do anyway. And I've got phone numbers at the end of the day. I got phone numbers and emails, Goldman
Yep.
Sachs clients. So I'm going to get something out of this experience. And then I get invited to New York and to the big boy office. So you had mentioned something about learning how the industry works, right? And relationships and stuff. I didn't know how the industry worked. I didn't know when when my report got thrown across the desk at me, literally the whole thing just thrown at me, told me, basically you're done, and had to pay for my own flight home. Had to pay for my own
Nice.
flight home. Um, I had a $42 price target on a stock at the time that was trading in the 60s and a sell rating based on what I was, my research. It's like this is going bad. Their operating system is not evolving, and they don't seem to they don't have a focus on that. Whereas Samsung is well ahead, and Apple has just launched their own basically, full screen device with, all the, the mobile, web surfing potential. And graphic display pixels were just fantastic. And that's just not what they were focused on. $42 price target, sell rating. It's trading in the 60s at the time. I'm nicely dismissed by the gentleman at Goldman. And I didn't understand how the industry worked and the way that what Goldman wanted to be was the first firm to offer a triple digit price target on Research in Motion was the parent company name at the
Yeah.
time.
Right.
They wanted to offer, and here's this idiot who's not certified in anything, thinking he knows what he's doing with this report. And so I learned a valuable valuable lesson that you may have the right thesis, but if the people around you, and the firm that you work for isn't, aligned, it can go sideways. And
Yeah, not to mention, I'm sure they had like a very big investment banking relationship with that firm too.
which I didn't have any
Yeah,
experience,
of
how
course,
to
right.
calculate that into, what I was doing. It was mostly self-interest, but I didn't know it was self-interest because I had no experience in the field. I learned later that this was just Seth pouring out Seth's thoughts and feelings, not taking into consideration, was I right? 100%, right? I mean, it was about a year that I got the phone call from Edward as I'm going across Alligator Alley in Florida from Naples to Miami. Do you see what's going on with research in motion after hours? No, why? Go check it out. And I go and it's down $6 in the after hours after it reported results.
Boom.
And we all know the story from there, obviously. So
Yeah,
let's
that's
get to
incredible.
one more question, and
Sure.
then I'll let you get to a Mets game or a better team. So Frank and I are both from New York originally, and we follow different teams though. So he's being a sport about letting me wear a Yankees shirt here. Um,
Well, let's be honest. I didn't know that was going to be the case before we popped on the screen, but
right, right. No, you're right. Maybe I knew my audience, and I'm just recognizing them.
right.
So let's see. In seeing the industry and market participants, right? The market participants' evolution over the last 2 decades. What do you think still resonates as a major pain point for the average investor and trader? Because we've got so many more, and from all, like you mentioned, I mean, the walks of life seem to have exponentially grown here over the last 2 decades. What's the biggest pain points that you see for everyday? I hate to use the word retail because there's a lot more sophistication that I see from the average trader nowadays and investor.
Yeah, I mean, it's an outstanding question. I would say that there's so many investors out there that don't understand what type of investor they actually are, right? Meaning that you hear every story. I mean, again, I don't want to keep bringing it back to X, but it's true. Right? If there's a big up day, everyone wins. It's a big down day, nobody loses, or they
Yeah,
nailed it,
yeah,
right? And so it's hard. It's hard to put blinders on with that. It's also if you have, financial news networks on all the time as well. They kind of feed upon the same theme all the time, and of course the Mag 7 dominates. But as we know, there are thousands of stocks underneath there that sometimes do much better than that. In the big scheme of things, I'll boil it down to this. The way I view it is that you're either an active market participant or you're not. And if you're not, you really should be market agnostic, right?
yeah,
Maybe working with a financial advisor or just, doing something that you don't think about things, right? There's so many different ways you can automate
mhm,
dollar cost averaging, as we joked about before, but very
right,
important nonetheless
right,
to do, right? And if I look at, my client base at Capthesis is mostly people that, are well established, who's made some money, but have an active interest in the market. Now, I don't know if they're trading all their capital. I would assume that most of it is long-term money. Some of it's trading money. That's what I do with mine. So you have to put in again. I can tell them personally. There's a bucket that I'm not going to change the strategy in, right? Just there for the long term. And there's another bucket that I just try to implement the trading ideas that I've talked to our clients about a
right.
lot. And so if you can understand, it's not easy to understand sometimes, especially when you're moving up. I remember when I was first again interning at Bear Stearns 1995. I had no way to find information, none. And then, but there was another kid, say gentleman, kid at the time working with me, and he's like, I just made whatever, $2,000 in these 5 stocks. And I'm like, how'd you find them? Well, I'm like,
Yeah,
you gotta tell me what they are. Like, seriously, how did you? Like, I literally didn't know. Where do you go to get these?
right,
There's no real computers. They're just trading systems.
right.
Funny to say now, and now I talk to a lot of younger people who see the content sometimes, and they know everything about it. Like whether they're looking at TikTok or whatever else. Everyone has a Robinhood. Again, my son comes to tells about 5 friends that have trading accounts. I'm like, is that legal? Like, how they do it at 16 or 17 years old? I don't know. I'm like, can I have one? I'm like, I don't think, no, just get that legal. Yeah, you're not even 18. So I just think there's a lot going at people. And when you hear the stories, and it's always about when there's a frenzy, that
Right.
someone's making a lot of money, doesn't have to be the stock market, crypto,
The ex-target
NFTs.
manager turned volatility
There you
trader.
go, right? You're the problem, Seth. No.
Yeah, I know.
But you're the answer, obviously, because you knew what you didn't know, and now you have tried and true process to go through. So again, I think you have to realize you don't have to be everything. You just have to kind of do what's right for you, right? If you're into
Yeah.
taking risks, do it. Like you said, you embrace volatility. I'm probably on the other side of that. I want to guard against it, right? And what are the best ways to, put those trades in motion and squeeze out, a swing trade without undergoing the back and forth movement
Right.
before it hits a target and comes back down, like what's happened over the past month. So I would say that. So identify where you are and realize that you don't have to be, the hedge fund manager that you hear about on TV all the time.
Yeah. I think that's beautifully stated. Um, I think, kind of piggybacking on that, because I think it comes from the same root, is information flow. Um, being able to, narrow down the information flow to what's being able to do so in a useful manner, distinguishing between what's useful and practical information in and about the markets versus what's noise, hyperbole, and even some that's good, but it doesn't. If you don't know who you are as an investor or trader, you don't know which information is practical to your, achieving your objectives. So I see a lot of that because social media is so prevalent, and in the comment section, as you noted earlier, like people put links to argue against your post. Well, this guy said that, and so I think information flow I see is still an issue with a lot of investors and traders. Either they don't have enough time in the craft, uh, whereby they've been able to distinguish what's true information that's practical versus noise, or they don't even know that's a thing. Like, what do you mean? I just follow price. That's, I get it, but there's more to it than that. So if I had one wish, right, if I could rub the lamp, so to speak, I would say that the broader investor population dedicates themselves, to establishing good resources that they can test over time and stick with that as part of their overall process. And I think that's a good place for us to land here, our conversation, because we got well acquainted over the last 5 years. I was attracted by your, good personality. When your personality comes out in your work, and even on X, so far as you're focused on the education of others, and want to see people cut through the noise. Your charts are clear, they're concise, they're fact based, they're cap thesis. And so that's what it tried and helped me to reach out and engage you, and eventually that evolved into the friendship that I'm honored to share here with others today. And I think you've been a great resource. People say to me a lot of times, they ask me for feedback, and the feedback is always in the industry. You had mentioned blinders. Where are my blinders, Seth? And more often than not, I say, most people, their blinders tend to be not having good resources that genuinely care about how or want to aid in helping you achieve your goals. And that comes through in your work and your presence in social media and your appearances on CNBC and Fox Business. So I want to congratulate you also in that journey over the last several years where you started Cap Thesis going out on your own. I know that takes a lot of courage and dedication. So congratulations, sir.
Well, Seth, thank you very much. And obviously, I echo your commentary. You've been someone I've looked up. I mean, I don't remember. I guess it was 5 years ago, but the cream rises to the top, right?
There
And
you
you
go.
are obviously there. And listen,
Oh,
you've done
thank
this for a long time. I have so much respect for you, especially now hearing all those stories or those war stories, if you
you.
will. But, in terms of, you may not think of it, but you are a very strong, positive presence on X, right?
Thank you.
And I'll tell you one thing that you've encouraged me to do is retweet some things that were right along the way,
Yes.
right? Why
I
not?
try to emulate you. Well, and I'm sorry to interrupt you, but it just reminds me of a point I try to share with Phenom Group members and investors in general. Pat yourself on the back when you've done a good job. It's most people, you're not going to get a lot of accolades in this business. So take
Exactly.
some time. If you're gonna beat yourself up when you do something wrong, pat yourself on the back when you do something right?
That's right.
So
Well said.
retweeting things when you're right is not, oh, you're not, people say you're not humble when you do that or what have you. It's a way to show people, validate the time and the effort, the work that you put in my opinion. So good
Yeah,
job,
absolutely
sir.
right. All right. Thanks so
Uh,
much, Seth.
Thank you, Frank. All right, folks, that's it from New York and Florida. Have a great week, and we'll see what our next podcast is in the future. Take care, everybody.